This is the briefing for Friday, March 24th. Today was a difficult day in the stock indices, just a real kind of slow grind higher. It's a 30-minute chart of the spiders, a 30-minute chart of the Qs, and you can see this is going back to yesterday right here, and you can see each of these wicks, how buyers or nor sellers could gain control of the market, and we just had a lot of back and forth movement. And then, of course, today we got the same thing, and then we got this slow grind going into the close. Now, breadth expanded decently. In last night's briefing, I discussed the fact that we had a divergence in market breadth, and I'll get to that in just a few minutes. But the same thing occurred in the Qs, the NASDAQ. You can see the wicks, all of these wicks were, sellers came in here, buyers came in there, sellers came in here, buyers came in there. And then, of course, today into the close, we got just this slow grind higher. Now, volume on this move here was really very low, and you can see that right through there. Now, right at the close today, we got a spike in volume, and both in the spiders and in the Qs, and that was right at the close. Breadth improved somewhat throughout the day, which is a clear indication that it was supporting this, but really not at the point where it was suggesting that we were going to have some type of substantial move to the upside. I think this market is just really looking for information, and it has an optimistic viewpoint to it. But certainly, if there's any additional bad news that comes out over the weekend or any day next week, we could see tremendous selling come back in once again. Now, on a daily basis, this is you can see this is pretty clear here. Each of these is a daily candle for the spiders. You can see the high volume that we had coming down into this move here, and then look what happens with volume as that rally has occurred. And then, of course, look at volume today, total volume today in the spiders, and you can see that it ticked down even more. This is the divergence in breadth that I was talking about earlier in the briefing. Now, also looking at 52-week highs minus 52-week lows, they're declining as well. Had a little bit of improvement on this rally, but now they're declining as well. So this market is, from an internal perspective, certainly is not strengthening. It has a short-term strengthening to it, but when you look at where we are in terms of a little bit longer-term time frame, the internals are really just not increasing or strengthening to confirm the move. This is the same thing in the Qs. Now you can see the Qs have a little bit of a double top here. And I hate to point that out because people think, well, it's a double top, then we're headed down. It's not a double top until we head down. So, I mean, it would be very easy for the Qs, and they are showing the most strength right now out of the three indices that I track. And it could be very easy for them to go up and test the 320 area. So watch this area right through here, this low from Wednesday, right around the 305 area. If that's broken through, that's going to open up 300. And if that's broken through, then we're looking at testing the 285 area and then down to 280. And then looking finally at the Russell, you can see the Russell is the weaker of the indices, at least at this point in time. Look at the rotation that occurred between this 170 and 178 area. This was pretty good indication. Yesterday, the Russell traded through 170 but closed back above 170. And that was a pretty good indication that potentially we were going to see some type of a rally today. Now, we did get a lower low below yesterday's low in the Russell. And then, of course, we got this move back to the upside, once again closing above 170. So 170 in the Russell is just a very, very important key reference area. Now, one of the things that I've been doing just in my own trading is I've been watching the Russell because it typically will give an earlier signal as to the potential for a move that the other indices will then follow. Now, it's not all the time, but it's a good percentage of the time, and the Russell really kind of predetermined this move here that resulted in the move down from this 178 area down to about the 168 area, about 10 points in the Russell. And the other indices took another day before they followed. Looking at where we are in terms of overbought and oversold, I should go back to the Russell and say this is Russell breadth. So you can see that it strengthened slightly also. So we do have a little bit of slight strengthening in market breadth, but not anything that I would suggest is predetermining that we're going to see or predicting that we're going to see some type of larger degree move to the upside, at least not at this point in time. All I can do is analyze the information the market gives me, and that's what it's given me in today's trading. In terms of overbought and oversold, this is the NYSE. It is neutral, and so is the Nasdaq. And I should point out, as I did in last night's briefing, that the Nasdaq indicator is converged, which suggests a tightening, and that would suggest the potential for a breakaway move in one direction or the other. Because the indicator is neutral, it does not give me an indication as to which direction that break will be. All we can do is monitor short-term support and resistance levels, and as they are tested and or broken, then that's going to give us a greater probability assessment of a break in which direction the market is going to go. Now, one more thing I want to add to this because I think it's pretty representative. This is the percentage of NYSE stocks above their 50-day moving average. And you can see that we had a little bit of a tick up in today's trading, but only 19% of the NYSE stocks are trading above their 50-day moving average. And this is the 200-day moving average, the percentage of stocks above their 200-day moving average. We had a little bit of tick up in today's trading again, but it's only 32% that are trading above their 200-day moving average. That does not really give an indication of strength, and it's not improving. And you can see basically that this moving average indication, this percentage of moving average, is basically in an area of rotation between 35 and 30, and in the 50-day moving average, about 24 down to about 17. So really not a whole lot of strength coming in, and not a lot of stocks beginning to move above their 50-day moving average, which I think is going to give us an earlier indication of the potential for some strengthening coming into the market and then some type of move higher. Going to be an interesting week next week. It's going to be interesting to see if we get any news, especially on the banking system, either in the U.S. or in Europe. And I think if there's any bad news that hits this market again, we're probably going to see selling increase once again. On the other hand, this is an optimistic market, and it is just betting that the Fed is not going to raise interest rates much further, and therefore it wants to go higher. So based on that, all we can do is monitor the internals and look for short-term and longer-term support and resistance areas. Now, to point that out, the previous day's low is always support for the spider, so that's going to be right around the 390 area. And then, of course, we're looking at 400 up to about 402 in the spiders as resistance. And then, of course, in the Qs, we're looking at about 307 areas as support, and then about the 314 up to about the 315 area as resistance. And that's basically just this rotational pattern that we've seen during this week. So going to be very interesting on Monday. I was tempted. I have a small short position on. I've kept on, and I was tempted to increase that short position, but based on this information that the market's giving me short term, that there's short-term strengthening, not an intermediate or longer-term strengthening, I decided to stand aside and just see what happens on Monday. Have a great weekend, and I'll pick this back up again on Monday for subscribers.